Welcome back to the Longacres Finance channel. Today I want to tell you about a quality dividend growth stock that currently offers a solid dividend yield and in my opinion presents a good long-term opportunity. The company is none other than Skyworks Solutions, ticker symbol SWKS. Skyworks is a wireless semiconductor developer that primarily designs and develops chips for smartphones. Their largest customer is none other than Apple, accounting for more than 50% of total revenue. Now normally, deriving more than half of your revenue from one client could be a potential risk in the long term, should that client run into trouble. But given that Apple is unlikely to slow down or go out of business anytime soon, I'd say Skyworks' revenue source is safe. There is always a possibility that Apple may switch its business to a competitor, but Skyworks is at the top of their game, and will likely remain very competitive in the near future. Google and Samsung are the two other large clients, accounting for a significant portion of revenue as well. So Skyworks is very dependent on the smartphone and Internet of Things industry, and is likely to swing based on supply chain concerns and demand for devices in the future. In my opinion, they are ideally positioned to capitalize from the current and future transition to 5G, and as smart chips make their way into more devices, Skyworks stands to benefit. Recently released fiscal quarter 2 earnings were very strong, with revenues growing 14% year over year and beating consensus estimates. Operating income came in at $367 million, with diluted earnings per share of $1.86. The company distributed $509 million back to shareholders. Of that $509 million, $91 million was distributed in the form of a dividend payment, and the additional $418 million was allocated to share buybacks. With the overall market falling this year, and Skyworks shares dropping more than the market averages, management is looking to capitalize on the opportunity to repurchase some of its outstanding stock. With further Fed rate hikes on the way, the recent COVID lockdowns in China, and the Russian invasion of Ukraine, there are concerns of further market declines in the second half of the year. However, the CFO expects to finish the year with double-digit revenue and earnings growth, despite any supply chain-related disruptions. I believe Skyworks is an attractive opportunity today for a long-term investment, but let's take a closer look at the valuation and dividend first. Skyworks currently offers a dividend yield of about 2.4%. That is nearly 1% higher than its 5-year trailing average. At this level, we are nearly seeing an equivalent buying opportunity to that of the March 2020 pandemic lows. The company has paid dividends for 7 consecutive years, increasing the dividend rate during each year. The latest increase of 12% was announced in July of last year. Seeing how today is July 1st, we will likely find out the next dividend increase at some point this month. Last year, the dividend was announced on July 29th, so if the company follows the same announcement schedule, we won't know the new dividend rate until the end of the month. The 5-year dividend growth rate is 14%. I think it's very likely the company will continue to deliver strong double-digit dividend growth over the next few years. The reason I believe we will continue to see such strong growth rates is twofold. First off, Skyworks currently has a payout ratio around 20% and has maintained its payout ratio near this level during the last several years. The company is also very profitable with strong margins and continues to see high top-line growth that should trickle down to shareholders. From a dividend yield perspective, Skyworks looks significantly undervalued, but let's take a look at its valuation from a free cash flow perspective to get a second opinion. I'll be using my price to free cash flow screener for this. First, let's take a look at free cash flow during the past decade. From a long-term perspective, we can see that free cash flow has increased by about 44% on average per year. That is a very fast growth rate. This average may not be a good representation of more recent growth, since free cash flow in 2012 was pretty low at about $192 million. It then jumped to $375 million in 2013, and again to $563 million in 2014. In 2015 there was no growth, but by 2016 free cash flow increased to $888 million, and $1.15 billion in 2017. 2017 was actually the year free cash flow peaked, as 2018 figures still today are all below $1.15 billion. Free cash flow per share has however increased at a rate of 53% per year on average. This is due to the diluted shares outstanding declining by about 1.3% per year during the last decade. Because of this, the free cash flow per share figure for 2021 and the trailing 12 months are actually higher than 2017, despite the company having less free cash flow. I used average month-end prices for the stock to compute the price to free cash flow ratio for the last 10 years. The long-term 10-year average is about 20, and the short-term 5-year average is also about 20. This would imply that a price to free cash flow ratio of around 20 has been a fair value range for the stock. Based on the trailing 12-month free cash flow per share, and the current price of the stock around $90, the price to free cash flow ratio today is about 14.5. Looking back historically, the last time Skyworks traded for a price to free cash flow ratio of 14.5 was around September of 2019. Using the short and long-term average, we can come up with a fair price for the stock today of about $128. So the price to free cash flow tells us Skyworks is trading for about a 29% discount right now. The company is on my buy list, and I have been adding to my position during the past few weeks, and I will likely continue to do so in the near future. I think the company will have a bright future, and that it's unjustifiably discounted by the market today. I fully accept the possibility that the price may continue to decline, and my buy rating will hold if such a situation occurs. My intention is to hold this position for the long term, and reap the rewards in the future should my prediction prove to be accurate. Let me know if you like Skyworks, and if you believe the stock is a good deal at its current price. If you enjoyed the video, please give it a like and subscribe to the channel. Thank you for watching and see you next time.